It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast across your weekend as we cover the latest property news on a Sunday morning and available on iHeartRadio, Spotify, Apple Podcasts as well as Amazon. Yes, a Sunday, February the 18th today, and we've got another busy dive into the Australian real estate property market as we crisscross into different states and territories. As I said yesterday, a lot of real estate auctions taking place. If you were at one of those, I hope that you were successful as either a buyer or as a seller. And earlier last week, we were talking to a bunch of people about property, including Eliza Owen, the head of Residential Research Australia at CoreLogic, about the property market. Of course, the RBA decided to hold the rate on Tuesday. We got some comments from the RBA Governor Michele Bullock. We were in the lower North Shore, weren't we, talking to Piers Van Hamburg and talking about some of the technology over the last 25 years. Yes, he did mention that back in the day, he had to develop his own photos that he would take of properties. And we also caught up with Nicola Powell, of course, the senior research analyst from Domain. And we also caught up with Matthew Hughes, talking all about the Perth property market. So it is another busy episode. That is all on the way next.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
There's a lot of people focusing on their strategies for the new year, trying to get ahead of what the outlook is going to be and how they can adapt. And it's, funnily enough, a little bit of a slow time for data too. So I don't always have the clearance rates on hand when auctions haven't quite started up yet. So it's always a busy period and good to be in demand.
Well, yeah, it's always good to be in demand. So what's kind of like the number one question that people ask you over the Christmas New Year? What's that burning issue?
Am I going to be able to afford to buy this year? Where should I buy this year? Are property prices going to rise? Are they going to fall? Those are the kinds of questions that we get. Overall, I think when it comes to 2024, we're probably looking at a year of two halves. You know, definitely softer economic conditions, which could influence weaker prices. Sydney looking flat over the past few months, for example. But, you know, as we'll probably talk about today, there's more firm predictions for a change in the cash rate, which could actually boost property value performance towards the end of the year. So it'll be an interesting one, no matter what happens.
Okay, and let's have a look at Melbourne then, staying in this lane. Demand from those needing housing remains strong, evident, of course, in the low rental vacancy rates and increased rent values from last year particularly.
Yeah, Melbourne's a great illustration where there were about 81,000 dwelling sales in 2023. And that's actually under the level of supply, if you like, in the purchasing market, where there were 90,000 new properties listed over the same period. But all that tells us is that there wasn't as much demand to purchase housing as there was stock available. If you look at other aspects of demand and supply for housing, like you alluded to the rental market, the vacancy rate across Melbourne was less than 1% at the end of last year compared to a 2.5% average. Rent values in Melbourne soared another 11% over the year, and Homes Victoria data suggests statewide there was a 5% increase in new housing applicants resulting from homelessness in the year to June. So again, this is an illustration that while the purchasing market is quite weak, the actual need for housing pricing remains critical.
And what about you there at CoreLogic? We're into 2024. You do these reports, of course, every year. No doubt you have a round table when you get back together last month and you start talking about, well, I wonder if we should do a report on this or on that. So is that something that you kind of discuss in terms of where those reports are going to be dropping for 2024 and what you're going to be discussing?
Yeah, we have regular reports that we put out, like the regional market updates, rental reports, and pain and gain reports. So those are all accessible on the website and they're dropped on a quarterly basis. But absolutely, we'll be looking out for any curveballs that come up in the year ahead and just looking to respond to those as they come.
Let's explore together the power of real estate. We keep you better informed and updated.
Well, I think we've seen a huge amount of property come onto the market across all price ranges on the Lower North Shore. I think it's about 25% up on last year. And it'll be interesting to see how that plays out over the next few weeks. A lot of that property just hit the market in the last kind of 10 days. So it's a little bit early to call, but my gut feeling really comes down to, supply and demand. A lot more supply, I think, that will put a bit of pressure on pricing is my gut feeling.
Now, what about the increased pressure as the market cycle is compressed due to an early Easter? I'm hearing different people saying that that's a little bit of a problem, a bit of a pressure point for the industry. Is that right? Is that a bit of a thing?
Well, certainly in our area, we find that, a lot of people go overseas and go on holidays, so they don't get back until the beginning of February when in line with the school term. So we have got a very narrow window to try and get these properties marketed and sold before a very early Easter this year. So the short answer is yes, which I think also explains why so much has hit so early on.
Yeah, and buyer expectation in 2024 is now higher, I think it's fair to say, than ever before. And one of the reasons for that is the online technology showcasing homes for sale. Now, it wasn't that long ago when drones were introduced as a way to elevate the height perspective and in some cases do some of these expansive video shots. Then you take the technology and marry it up with social media and you have this very high bar, this very high expectation from potential buyers. I mean, go back to when you were 25, you didn't have any of this going on, a completely different thing. So that expectation is real in the market right now for the way that properties are being presented.
It has changed so much. I mean, believe it or not, I used to actually take my own photographs when I first got into real estate. We'd go out there with the camera, take the photos, and then take the film down to the processing shop. So it has just changed so much. We use drones and video on everything, particularly where we're located with, harbourside locations. You just need that, and the consumer expects it now.
Well, a couple of days ago, I played part of the RBA Governor's press conference, and I've got a couple of more pieces to play for you this morning. The first comment is in regard to the rate cuts, but also some of the risks associated around the possibility of some rate hikes.
It might be. We've already emphasised that there could be risks on the upside, there could be risks on the downside. Now, if the risks on the downside present themselves, then we have the options of cutting interest rates. If the risks on the upside eventuate, then we might have to look at whether or not we need to increase again. But I think the point is that we need to make sure that we don't have to backtrack on inflation, that inflation doesn't get away. We do need to make sure we're making progress. We need to convince that that progress is going to continue. That's what's going to help ultimately mortgage holders and everyone. So I think the thing that worries me is that we get some more shocks and we don't know where they're coming from. You look at the last few years, pandemic, Ukraine, Middle East, what's going to come from left field? That's what worries me. What I don't know is coming and what the implications of that might be for inflation and inflation expectations and how do we handle it.
And that, of course, is the big one, isn't it? That's the big problem now, living in this volatile world, is that we just don't know where the next shock is coming from. And I did think that the press conference, in terms of how Michele Bullock answered questions, was pretty honest and straight down the middle. She was also asked about the elephant in the room, and that was what is currently happening in China with the slowdown in the market there and how that might affect the RBA's target range.
So China, yes, the slowdown in China is built into our forecast. As we all know, they are experiencing difficulties, particularly in their property sector. There has been some policy response to the slowdown in China GDP, but it's still a slowdown. The way that impacts us, of course, is through commodity prices in particular and our exports of commodities. So we are very focused on it. We judge things, the risks actually at the moment is fairly balanced. So I'll come back to my previous point that we're not ruling in or out interest rate changes. The board decided today to stay on hold, given all the evidence it had. There was encouraging signs. The forecasts indicate in the central forecast we are coming down around about to target in 2025 and then midpoint 2026, and the judgment that the risks are broadly balanced.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
Absolutely. I find it really interesting because I do think that particularly when you look towards stage 3 tax cuts, there are many economists out there that are concerned about the inflationary impact that could have. Look, I'm yet to be convinced. I think obviously, you know, we've seen such a change in the cost of living. It is a cost of living crisis. And I think what comes with that is actually behavioural change and emotional change from Australians in terms of, you know, they want to build up a nest egg if they're able to for a rainy day. And I think just because we will see more Australians take home more pay doesn't mean they're necessarily going to go out and rush to spend it. So, you know, I do think that we are all living through such a significant change in the cost of living that I think we're all being very mindful of what we spend on what.
And despite Sydney's reputation for sky-high property prices, resale returns over the past decade have been higher in other Australian cities. And Sydney's median house and unit prices surpass those other cities, but resale returns have been more impressive in smaller markets. So, Nicola, where is that standing out around the country for you? What is really leaping out?
So I feel like we need a drum roll, don't we, in launch of what is the city that has seen the greatest returns. So we actually looked at, you know, we know property markets go through price cycles and we know that Sydney is renowned for these roller coaster property cycles. And what we mean by that is Sydney tends to see greater rates of price growth, but we also see stronger rates of pullback in price in Sydney. But what we've seen is some of our other quiet achievers have seen some phenomenal rates of growth over the last decade. And we looked at the average marginal returns on property, and the cities that came out as the top performers for houses were actually Perth, Hobart and Canberra. Now, they saw returns of anywhere between kind of 5 to almost nudging up to 7%. So that's an average annual return over the last 10 years. And Sydney, didn't see, Melbourne saw the smallest over the last 10 years, then followed by Brisbane. But yeah, those cities, I mean, we know Perth and Adelaide have seen, and Adelaide was also up there at almost 5%, but we know Perth has really seen strong rates of price growth and really avoided any downturn that other capital cities really fell over last year.
Yes, and if you look at the 2024 year, Perth is probably in that solid position to just pick up from where it left off. What is happening, though, in Hobart, do you think? How is Hobart going to perform?
Yeah, Hobart has been really that interesting case because what we had seen prior to, say, the last 18 months, it's just prices just continued to rise. We saw strong rates of growth really being driven by people opting for that lifestyle location, people moving from the mainland over into Tasmania, getting greater value for money. That kind of retirement haven narrative really, is picked around Tasmania. I think we have seen prices pull back, but that return, when you look over that last decade, which really does capture a long period of time where we continue to see prices prices rise. The average marginal return over that 10-year period has been 5.8% each year. We have seen prices pull back recently, but I think, we did see such a phenomenal rate of price growth. I mean, Hobart and Canberra saw the greatest rates of house price growth during that pandemic upswing, which, none of us can forget that because it was such a phenomenal upswing and was the steepest for many of our capital cities.
Ready to step up your property knowledge? Access powerful insights with us.
Yeah, so I guess from a macro level, we update all of our research on a quarterly basis. Myself and the team sit down and review where we're buying and why, make sure that things are trending in the direction that we thought they would be. And that typically starts with looking at local governments initially. There's a number of suburbs that we don't buy in purely because we don't favour the local government, whether they're not very progressive or pro-development or whether they just have a history of poor town planning decisions. So it starts at that level, and then we drill down to suburbs within that local government area, and then we're looking at obviously pockets within those suburbs, because even though we green light a suburb for investment purposes, it doesn't necessarily mean the entire suburb is green lit. In fact, it's quite often not the case. There's pockets we do buy in and pockets that are completely blacklisted for various reasons. When we're starting at that local government area, we've spoken previously about why we're not buying in the Rockingham local government area, and we didn't have to get too far into the research for that one. And it's sort of, sometimes we'll just hit a roadblock where we can't get comfortable with certain statistics at a high level. And in that particular case, it was the amount of renters in the area, which is probably pushing 50% at the moment. And that's too high for us. So it gets to a quick no there, and we move on to other areas, which makes it hard for us because we don't buy in a lot of areas. And we do have a very short list, possibly the shortest list of approved suburbs of any buyer's agent in Perth. But it does mean that our clients are getting the better outcomes over the long term and a really solid understanding of which suburbs are going to outperform consistently over the long term.
And of course, when you are doing all of this buying, it comes down to a lot of analysis, which we talk about. So how does the buyer's agent normally analyse the property market trends for an area like a Perth in order to provide advice to investors?
Yeah, I guess we're not just sort of reading the headlines in the paper and looking at what the next hotspot is supposed to be. Often we're not buying in the hotspots. We're looking for long-term trends in demographic shifts. We're looking at income changes within a suburb. We're looking at town planning decisions within a suburb that might impact the demographic in the area. We're looking at population growth and where that population growth is coming from and what sort of incomes those people have. So we're really digging into this right down to a micro level to decide where we're going to buy and what trends we see emerging. And what we're essentially looking for is an affordable suburb. Sometimes they're lower socioeconomic suburbs, but they're showing signs of gentrifying over time. And we've got a pretty good track record of outperforming the market from that perspective and getting into these areas at the right time. And not necessarily always having the best 1 year or 2 year performance, because that tends to belong to the so-called hotspots. But if you look at our performance over the 10 years that I've been a buyer's agent, you'll see a consistent outperformance of the median with less downside risk in a soft market. And that's what we're looking at for our clients, because our clients typically are those a little bit more savvy, a little bit more long-term view investors. They're not just looking to jump in and out of markets over the short term. That's not our investment philosophy, and it tends to align with what our clients are looking for.
We connect you to the best real estate information across Australia. The Real Estate Podcast.